What if I told you that profit alone means nothing if your equity curve is unstable? Many traders chase returns, but very few study the shape of their growth. And the shape of your equity curve determines whether you will survive long enough to compound. In this episode, we are not talking about entries or setups. We are talking about engineering your performance like a professional. Hi everyone, welcome back to Wednesday Moves. This is episode 29 of our professional trading course. Up to this point, we have built execution skill, portfolio structure, capital allocation, and adaptability. Now we refine something deeper, how to optimize and engineer your equity curve for long-term sustainability. Because in professional trading, consistency is more important than intensity. What is an equity curve? Well, an equity curve is the cumulative representation of your trading performance over time. It shows not just how much you made, but how you made it. Was growth steady and structured, or explosive followed by deep drawdowns? The curve reveals emotional discipline, risk management quality, and strategic alignment. Why professionals study the curve? Well, professionals analyze the stability of growth rather than celebrating isolated high return months. A smooth upward curve indicates controlled risk and disciplined execution, and a volatile curve with extreme swings suggests inconsistency and structural weakness. The goal is sustainable expansion. Smooth versus volatile growth. A trader who makes 40% in 1 month but loses 30% in the next is not progressing. They are oscillating emotionally and financially. Controlled growth, even at a lower percentage rates, creates psychological stability and compound efficiency. Stability builds confidence. Drawdown engineering. Drawdown is inevitable in trading, but unmanaged drawdown destroys compounding. Professionals define maximum tolerable drawdown levels and adjust risk before emotional damage occurs. Recovery speed matters more than temporary expansion. Performance metrics beyond profit. Net profit is only one variable, and risk adjusted metrics such as expectancy, drawdown depth, and variance provide deeper insight into sustainability. True performance is measured by consistency and not peak return. Reducing variance without destroying returns. Performance engineering is not about becoming overly conservative. It is about optimizing position sizing, filtering suboptimal trades, and calibrating exposure relative to performance cycles. This creates smoother growth without eliminating opportunity. Equity curve feedback loop. Now, one advanced concept is dynamic risk scaling based on performance stability. During periods of underperformance, exposure is slightly reduced to preserve capital and emotional balance. During stable performance phases, exposure can increase methodically within defined limits. This feedback loop stabilizes long term progression. Filtering trades using performance data. Data may reveal that certain market sessions, volatility regions, or structural conditions produce lower expectancy. Filtering these trades improves overall equity curve shape. Optimization is about refinement, not overcomplication. Compounding with control. Compounding should be gradual and performance based. Aggressive scaling after short term wins often amplifies volatility. Sustainable compounding aligns growth rate with statistical confidence. Psychological benefits of a stable curve. A smoother equity curve reduces emotional stress and decision fatigue. It builds long term discipline and strategic clarity. When volatility decreases, confidence increases. When to intervene in the curve. Significant deviation from historical performance metrics may signal structured decay, or misalignment. Intervention should be data driven and not emotional. Performance engineering requires objective evaluation. Here's a core message. Amateurs chase profit and professionals engineer consistency. The equity curve is not just a result, it is a reflection of discipline and structure. In the next episode, we conclude this mastery phase with a complete professional trader blueprint, bringing everything together into one structured roadmap. If you're serious about building a sustainable trading career, subscribe and continue this journey with me. See you in the episode 30 of Wednesday Moves.